ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
If you're Green, are you referring to circle, to arc jumping circle? I think it's great if that's what you're talking about. But yeah, dummy's gonna dummy, my man. Dummy's gonna dummy. Good for her, just taking profit. Let's bring this down to a manageable level. We got stuff to do today. Oh, first of all, put that over there so it doesn't splash my coffee. Then take this coffee right here. Let me adjust the computer so I don't look so weird. And let me just take a sip. Well, it was going to be vanilla. That's right. The word vanilla twice. But when I opened up my new box today of all my new flavors. I've been waiting months. And there are some good ones. I saw butterscotch in there. I saw toffee. I saw peanut brittle. Yeah, all sorts of delicious ones. But I had my eye on vanilla. I mean, that's the purest vanilla you can have. Vanilla twice. That's either vanilla squared. It's the logarithm of vanilla. I don't know. I don't know if it's orders of magnitude when you have little vanilla and big vanilla. But I know this. I didn't eat it. Why? Because Loki came in and whacked into the pile of them as I was getting them all smooth. And so he made the choice for me because he clawed one of them out, which means he ripped it open. So I was like, well, then that's the one I have to have. So this is mocha. It doesn't really smell mocha-y. Let's see. I don't know, man. When you got your mind on vanilla logarithm and then you have mocha, maybe mocha's good. In many settings, mocha would be good, but I don't know, man. Yeah. Okay. Let's see. We'll cover the basic stuff first. Powell still, yeah. He can say what he wants. We've had 2 Fed governors come out now. 2 Fed governors have come out in 3 days. 2 in 3 days and say cuts are coming. Cuts are coming. Jerome has to say no cuts. It's not Jerome's decision. That's the thing. There are 12 governors. They vote. That's it. Jerome can't do nothing while if they come around and say cut, and what they're doing is they're covering their bases so that if some event should happen, which again, just worsening, worsening employment and unemployment data, worsening macro, then they can come out and say, see, we told you, we told you, we forecast this. Whereas if they don't say anything, a cut in July looks like an emergency cut in July, which it is, because they probably, I think if you got them all together today, they would have cut last week. Jerome included, they would have cut last week. So I think they're going to cut in July. I thought they were going to cut in July because they can't do the meeting skip to September, because then they have no control over. I mean, they already have no control. But again, if you're the organization that's supposed to control, stabilize, and support the biggest economy on earth, the economy by which all other economies are tethered, and you're trying to drive this incredibly complicated vehicle by looking in the rearview mirror at 6-month-old, soon-to-be downward revised data, that's not very forward-looking. I want the pilot looking in front of the plane, not 6 months behind it. Think about that. The pilot of the economy, Jerome Powell, is looking 6 months in the past at bad data and trying to fly you over that mountain right there. Yeesh. I don't know if I like that. I get my coffee from Amazon. I order the little K-cups, the little pod things from Amazon, and then I have my machine, and I go coffee, strong, 12 ounce, and then I click the K button, and then I put my creamer in the little, it's got a little latte thing that heats up the cream. Ooh, sweet Jesus. It's good, even when it's bad, even when it's just this weird mocha flavor. Still good. And I use a neutral creamer. I don't want to spoil it with the creamer. Well, I don't think they really flavor it. I think what they do is they scent it. You smell it. I don't really think you taste anything other than coffee and creamer. So I don't know. I don't think they flavor it with anything. Anyway, so Jerome Powell's going to keep saying what he's going to say. Those guys still have no clue about the economy. They never have. Economists don't understand the economy. They never have. There was some guys yesterday talking about the housing market and how, I mean, talk about painting a rosy picture. The housing market is not doing great. And so there's more supply. There's like six and change % more supply. That means there's a lot more houses for sale. Now, if demand is consistent, and you add supply, small economics test real quick, demand is the same, and you add more supply, does the price of each individual unit go up or does it go down? Remember, we're adding supply. There were 10 houses for sale. There's now 16 houses for sale, to over-dumb the question. Yes. Prices go down, small e, right? So as supply increases, if demand is consistent and supply increases, down, 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 right? That is 100% accurate. So for this guy to get out there yesterday on CNBC, this guy's part of some housing thing, whatever, retail, real estate, whatever. And like, by the way, that job's going away. Did you know, I don't know if it's everywhere, but in California now, did you know we get to pick what rate we pay the realtors? It's not a fixed thing anymore. They don't just get to make money off your stuff. I mean, to be fair, I negotiated the whole goddamn thing on my house. My realtor did not do a lot. Their realtor did even less. And they split a lot of money. They split over $350,000. And they did nothing. I did it all with ChatGPT. The whole fucking thing. It was, that's not exactly the case in California, James, I don't think. I think there was some fixed rates on one side. I think One of the agents, it was negotiable, and one of them, there was some fixed fee. But anyway, now you can pay them all the way down to like, you can just pay them like $20. Here, $20. And I also don't think that's the same everywhere across the United States. Again, I'm not in real estate. You guys might know more than this, but as far, because I read an article that was saying that this is a big change. And I guess there were something was fixed and something was not. And now nothing's fixed. Are you in California? James, are you in California, James? If you are also in California, then you probably have a better fix on what that was. But anyway, now you can give them like $40. So, and also remember, we're in the People's Republic of California, where the rules may be a little bit wacky. Okay, so anyway, this guy from this real estate jargon idiot came out and said, "Oh no, all of this new supply is going to affect the jobs market. It's actually going to create new jobs." What the shit? Like, what on earth is this guy talking about? That is not the way it works. That is the opposite. And you just realize, and this is a guy who speaks for a lot of other people. You just realize people are stupid. I mean, really, really stupid, uncomfortably stupid. And that guy's giving people advice. That guy's giving hedge funds. He's getting real estate moguls advice. You guys see Grant Cardone, how he is piling into Bitcoin. I think they've got already $500 million worth of Bitcoin. You know, his kind of real estate, whatever empire. I mean, Cardone, he's a douchebag, but he's a douchebag that knows real estate. And that real estate douchebag is buying Bitcoin hand over fist. I think it's funny. Another funny anecdotal story is that my dentist, who's great, who is also my workout partner, we worked out for years. I got him to buy Bitcoin at like, I don't know, $1,200 a coin, below 1,500 for sure. I have to go back and check, but I think like 1,200 something. And it got up to 18 or 19,000. It sold back down. He panicked out of it. He didn't say he panicked out. He said, "Oh, I had to sell." He had 2 Bitcoin. He said, "I had to sell them for my house, to get the mortgage on my house." I was like, "What?" You know, because he didn't tell me he sold them for a while. He's like, "Yeah, I sold them." I said, "What price?" He said, $7,100 each. I'm like, "Okay." And he's thinking, "Hey, man, I spent $1,500 or whatever, $1,200. I got $7,100. He was seeing it come down from 19,000 in 2017. He's 2018 now. He panics. I said, "Well, how much is your house?" He's like, $7 million. I'm like, wait. So you took $14,200 out of Bitcoin, a thing that we've already shown has a pretty good likelihood of success, to help you get your down payment for your $7 million house. Because I'm guessing he put $1.5 million down. $14,000 doesn't move the needle. That's nothing. It's not even 1% of his down payment, which is 15% or 20% of his house. Like, come on, bro. That's some cold garbage. So the other day I was in, I got my cleaning done, all that. He's like, "Hey, how's it going? How's crypto going?" I'm like, "Good, man. You see Bitcoin at 110,000? He's like, yeah, no, that's great." But I could tell underneath he was thinking, did I just light $195,000 on fire for FOMOing out? Yes. Yes, you did. That's probably 2 employees at his place for a year. He has like 40. His staff is big. It's the biggest. It's one of the biggest dentistry places in LA. Anyway, whatever. You know what? It ain't for everyone winning. Winning is not for everyone. As we saw over the last few days when the prices dropped on everything, not all of us have the emotional dexterity for this, do we? No, we don't. There was a lot of mad people, a lot of sad cows last Friday and this Monday. Weren't there not? Were there not? Delicious. Delicious. You sold your town. Yeah. Oh, okay. Used a broker, flat rate, 1%. Yeah. Some of the, what is it? Redfin? I think Redfin has a fixed rate and they'll do all this stuff. I mean, anyway, oh yeah, the real estate, that's what a dick punch. Plus, you would think with all of the commercial real estate that's kind of going away, that there's going to be a lot of repurposing of commercial into what, mixed multi-use, and then into maybe eventually residential. I don't know how quick you can do that transition. I know there's a lot of things that have to happen, but you would think that that's coming, and that should ease housing prices, which, by the way, is a good thing because housing prices are stupid expensive. Anyway, yeah. Let's see. The commission in all states was under litigation for price fixing. The commission rates vary by state. In most Texas, the rate was 6%. Yeah, there were some. That's what I thought, Max. Yeah, I thought there were some states that had fixed rates. Yeah. Options are doing good, man. Everything's been good. I got no complaints. You know, I was talking to a prospective client. We have the digital private clients have a pool that we're putting together that I manage. And I was having some phone calls about some other people that wanted to join that pool. And one of the guys was a doctor, really nice guy. And we were kind of chatting. And he's like, I'm familiar with options. I don't mess with a lot. He goes, it doesn't seem like there's a lot of money in it. And I was like, that's valid. I said, but it's consistent money. And it's week after week after week compounded interest. And because of the compounded interest effect, you just have to stay in the game. And the beauty of options is when you see these crazy price action, like we saw last week, when you see, Bitcoin, Ethereum just go up or down by 6, 8, 10%, 11% for a while, Ethereum, in a matter of like a half day or a day. That volatility gets cooked into future premiums in the options market. So you'd be like, oh, well, you sold some puts and therefore now the price is down $2. But you get to roll those puts. And the beauty is all of that crazy volatility raises the price of premiums going out into the future, especially in the near future, the kind of near wave, right? And so you can roll, I let myself be assigned. I rolled some, I let myself be assigned a little bit. And I just look at my cost. Like you can see it constantly readjusts your dollar cost average into the underlying asset if you get put into the asset. And so already I've just seen it go down and down and down and down. And even with all this craziness, I'm almost at break even of the dollar cost average of the contracts that I got assigned. Meaning I sold the put, the price crapped the bed. They pushed me into the asset. I willingly went. I could have rolled them. I willingly went into the asset, sold calls against it. And guess what? We're only in not even 2 weeks into selling calls. This is the beginning of the second week. And we're already at $19.10 average. So it's like it just goes down. And it started at like 1956. 19. Of course, that doesn't count any of the premium you got before you got pushed in. It's just the premiums for the week that you got assigned, and you deduct the premium from the price you were assigned at, and that gives you your dollar cost average price. So it's kind of like on the weeks that you get assigned, that premium just translates over into a lower entry price for your underlying asset. I know I'm talking over some people's heads, but for some people, it's like, hey, all right, I get you. Anyway, the long answer is good. We're seeing that on the bad weeks, on the tough weeks, we're making 1.6%. And on the good weeks, we're making over 3%. And it's still just kind of grinding out that 2 and change percent. And all my calculations are always done on 1.5. If I can get 1.5% a week over time, compounded, rich. You get rich. That's what you get. What do you get? Rich. So yeah, options doing good. Excuse me. Ever since that green pollen event last week, I've been coughing. You know what helps the coughing? Coffee. Coffee helps coughing. Delicious. Oh, nice. If you guys do well in an options play and you don't mind talking about it, put it in the chat. I'd like to see what you guys did, kind of how you played it. My guess is if you did well yesterday, meaning you got out yesterday. If you got out yesterday, it's because you sold calls Friday. If you got in yesterday by selling puts yesterday, today you're looking great. That's why I put in the private chat. We have a private chat for all the options we have an options program. And so for all the people in the options program, I put in there, I said, hey, for those of you that had the cojones to sell puts today, well played. And for those that sold puts, it's been all over the place, but because the price cratered over the weekend, mostly Saturday into Sunday, nice work, Frank. So you sold calls on Friday, got out Monday. Nice. I sold some calls on Friday. I sold some calls yesterday. And the stuff that I sold Friday lost about 70%. It was almost to the point where I was going to deuce out. I decided to give it a couple more days, let grind some pennies out. The stuff I sold on Monday, it actually by later in the Monday, I could have cashed back out, but it wasn't a big sale. It wasn't like a lot. I said, I'm going to wait. And of course, the price goes back up. So those went back up. It is what it is. It's still kind of really far out of the money. So if the price recovered sufficiently, I would be fine. I would be very fine. Well, let's see. What is your sentiment regarding decentralized science? Do you see it as a strong narrative moving forward? No, I think it's just a way to put. Look, decentralization is the thing. I don't know that decentralized this or decentralized that makes any sense. That's like saying electrified kitchen appliances. Well, what other kind of kitchen appliances are there? It's all microwave. Do you have a gear shift on it? Do you like one of those, what do they call those little generators, Beijing generator for your, no, man. You don't have a wood fire stove. Well, some people probably do. No, so it's all, I just don't, everything where decentralization doesn't make everything better, but it makes a lot of things more elegant, or it makes parts of things more elegant, right? Like decentralizing pizza stores, you're like, wait, what? Why would that even? No, you wouldn't. It wouldn't make any sense. Doesn't make any sense. It's not like if you go into a Domino's, right? They have like 17 guys all making the crust, so that no one crust can be worse or better than the others, and they can come on, like there's a certain point where, you can disintermediate only so much. I think the idea of DeSci, like DeFi or any of these other things, if you can more democratize a process, or you can create more inclusion because you get rid of middlemen, like rent-seeking middlemen, I think you have something. I think you have something valuable if you can achieve that. And I think the value in science will be sharing data and letting AI systems process that data, and then AGI systems, and near AGI systems, then AGI systems, then super intelligent systems, things like that. But I mean, at that point, we're on the sidelines. But I don't think DeSci is anything different than any other every decentralized. Like, I think it's I think it's cool marketing, probably, and that's about it. I don't see Glaxo. I don't see a lot of these big pharma companies really getting behind decentralized science. And I don't see them, but I do see them taking their data, possibly anonymizing it and letting large language models and machine learning and large multimodal systems and neurosymbolic semantic learning engines and all this kind of stuff crunch that data. And maybe that stays siloed inside those companies, and maybe it doesn't. With artificial intelligence and artificial general intelligence coming, everything is everything's decentralized. Everything. Because you don't have a choice. Because if you have a capable enough model or set of models, you'll get the data you want. You will get what you need. So I think everything's becoming decentralized, and to peg it to a specific segment of the economy, or what I think that's kind of marketing. I think it's marketing. Yes, I saw the white paper and midnight and dust and all that kind of stuff. I think it's just this is something that was supposed to launch 2 years ago, by the way. And Charles, well, that's what he does. He shits the bed on projects. And he blamed it. Oh, it's not me. It's a separate team. It's completely set. Bullshit, dude. Nothing happens without Charles' grace. So, there's going to be an airdrop kind of claim thing. There's going to be a claim thing. And the claim thing, by the way, the snapshot was taken June 11th, it looks like, for that midnight. I don't think I'm getting a dime because my Bitcoin is wrapped. My Ethereum is wrapped in wrap stake Ethereum. So any midnight I would have gotten for owning Bitcoin, well, it would have been an exchange anyway, so I wouldn't have gotten that. I don't know that a lot of people that own Bitcoin are going to go take their wallets and go ask for midnight tokens. So that's probably a non-starter. I know what Charles is trying to do, get everybody involved, and I just think most people are going to just go hit the bid. They're going to just grab if they have anything, they're just going to go immediately sell it. I'm going to check my Ethereum wallet, see if I got something. I'll check my Phantom wallet, see if I got something, and immediately sell it. All of it, 100%. I'm not keeping a fucking coin because Charles is a loser and losers lose. That's it. I don't think another privacy coin. I've been watching privacy coins to see if it would try to figure out in my mind if it made sense, but I think even now privacy coins are even less interesting. They're even less interesting with all of these stable coins that are coming. Remember there was like stable coin-ageddon, where if you had crap stable coins, they would just get destroyed. And they did. A lot of stable coins went away. But now this is the stable coin rebirth, the stable coin birthing. It's actually kind of one of the things I want to talk about. By the way, this morning, was it this morning or was it yesterday? Let's go over here and look at what Kathy did. Kathy, let me see if I can put a picture up. You guys see it? Little Kathy? Little Kathy? What did Kathy do? WWCD. Oh, no, not like a C, not like a cross-dresser. Kathy Wood's ARK starts the week with a fresh $110 million Circle stock dump. Circle's 8th largest holder, ARK Investments, continued offloading Circle shares on Monday amid the stock briefly topping at $299 of completely unjustifiable cost. You have a bunch of fucking morons buying that thing right now. Now, up to $299, they've all been right. Have they been correct? No, but they've been right. But it doesn't matter. They made money, which is good. You want people to make money. I'm all for people making money. I don't think that any of these people are doing any math, but you know what? It's probably the same people that are buying strategy and just hoping that they're just going to get rich because strategy. And like, yeah, but it buys Bitcoin. Yeah. Okay, but you can buy Bitcoin and then not pay them. Yeah, I would do strategy. Why? Because other people doing strategy. All right. I mean, it's the what would dummies do thing. I mean, I guess if you get ahead of a bunch of dummies, it's all a beauty pageant, right? So ARK continued dumping Circle shares after selling 1.25 million Circle shares last week for about 243 million. ARK sold another 415,844 Circle shares from its funds for 109.6 million on Monday, according to trade notifications seen by Cointelegraph. The transaction marked the fourth dump of Circle by ARK since the asset manager started offloading Circle shares on June 16th, and I think this is correct. I think what she's doing is correct. You want to be profitable or prideful? This is profitable. With the new sale, ARK has now sold about 1.7 million shares, which accounts for 37% of its 4.5 million Circle purchase made on June 5th. ARK Fund still holds about 2.6 million Circle shares. Their latest sale involved transactions for 3 holding funds, including ARK Innovation, ARK Next Generation, and ARK Fintech. ARK K, which is ARK Next Generation. ARK Innovation. So there's ARK Innovation, there's ARK Next Generation, and ARK Fintech Innovation. Wow, you got to really keep up with the ARKs, all these different ARKs. Anyway, ARK, which is innovation, their innovation ETF, the largest ARK fund with assets under management of 5.6 billion, sold 306,921 Circle shares on Monday, still holds about 1.7 million shares, accounting for roughly 6.8% of the fund's total assets. The other 2 funds, ARK W and ARK F, offloaded 72,300 shares and 36,600 shares respectively, resulting in holdings of 625,645 shares. Okay. Or about 900, let's call it 1 million shares. They got about 1 million shares collectively. All 3 funds together held 2.6 million Circle shares after the new sale, valued at $69.9 million based on Monday's Circle closing price of $263. ARK's latest sale came amid the ongoing meteoric rise of Circle shares, with the stock briefly topping 299 on Monday, which is fucking stupid. There is an endless capacity. I guess there's just an endless capacity for gambling, and fundamentals mean absolutely nothing. I guess this is something I got to grapple with. My buddy Ben grappled with this a while back. Ben is a hedge fund manager, a little bit older guy, but he's very shrewd. He's been through every crash you can imagine. Like, he was on the trading floor in 1987. Like he's seen it, and he had to grapple. He told me this a while back. We had dinner. He said, "I've had to grapple with the reality that fundamentals mean nothing." That's tough, isn't it? That's tough. I'm grappling with that too. You always think, oh, you just a disenfranchised investment guy. Your level of snark has gone too high. You're cagey. You're tired of all the whims of the markets. You become net negative in your older years. No. He's right. You have to grapple with the reality that the fundamentals don't mean a fucking thing in these markets. It's led by stupid. It's led by FOMO. Yeah. So there we go. I mean, good for her. I mean, good for anybody that's making money in Circle. Again, it's a company that makes less than the short-term treasury rate. That's all they make. So unless you imagine that they're going to be marginally counterfeiting, like printing money that doesn't have, like, for instance, printing money where there's no input for it, like print first, sell second, and that money doesn't just seep out into the ecosystem. I think Circle's pretty good about that. So the fact that they don't counterfeit should tell you that it shouldn't be valued at what it's valued. It should be valued at however much money is in it, and 4 or so percent of that, and then back out the cost for running the business. Like, I don't understand at all how people are valuing this thing. It just doesn't make any sense. It doesn't make any money. It makes a little bit. I mean, if it has tons of money, it makes still that same percentage. It's a percentage of the whole. And so I don't know, man. It just seems a little weird to me. Okay. Do you guys remember Brandon was talking about SEI? S-E-I. Let me see if I can. Oh, no, is that gonna, that's not going to put a picture of it. Let me get a picture. Let's get a picture. Boop. Let's put the picture in here. This is what we're like a legit news agency. Look at all this. We're doing some news. Let's talk SEI. Altcoin SEI leaps 47% following Wyoming stablecoin candidacy. What? And yes, I didn't say that wrong. Candidacy. You say the did. Candidacy. Candidacy. Be candid. Candidacy. Analysts told Decrypt that SEI's, S-E-I, SEI? It's like that guy, that little meme they always have when someone says something silly or whatever. There's some Karen yawning, yammering, and then the Asian guy in the back goes, "Gay." It's like that, but I guess SEI, I don't know. Anyway, strong on-chain growth over the preceding months could help support its recent price. Altcoin SEI was the best performing top 100 crypto asset in today's trading, jumping 46.5% to 28 cents in the past 24 hours. I don't think that's where it's at now. I think it's given up a little bit of that. But anyway, the impressive performance builds on its momentum from earlier in the week. SEI is up over 72% in the past 7 days. Of course, I think I ended up buying it way back when it was higher than this. I think I bought it higher. I'd have to go check. I think I bought it at now I have to know. Now I have to know. What did I pay? I think on SEI, I want to say, I'm going to guess 29 cents. I don't even think I've broken even yet, but I'm going to see. Let's see. View SEI, S-E-I. Oh, let's see. I got it a while ago. Jesus. 36 cents. Oh, man, I got dick punched. I'm nowhere near break even. Damn it. Yeah, well, great. It's almost caught up to how far down I am on the investment. Oh, well. Oh, I'm doing my little knee thing. I have a little knee thing that's doing knee stuff. It's pretty cool. I gotta adjust it. Make an adjustment. Ooh, let's go some real intensity. No more of this little JJ stuff. We're going for reals. All right. So the surge comes after Wyoming Stablecoin Commission selected SEI as a candidate blockchain for its upcoming dollar-pegged stablecoin WYST earlier this week. It will face competition from rival blockchains Aptos. Nope. Arbitrum. Nope. Well, nope. Avalanche. Nope. Base. Maybe. Ethereum, most likely. Polygon, nope. Optimism, maybe. Stellar, no fucking chance. Solana, yeah, right. And Sui, not a fucking chance in hell. So anyway, if that's, isn't it funny Cardano's not on that list? Charles is from Cardano, and Cardano is not on that list. Charles lives in Wyoming. He goes to these meetings. He buys these dudes dinner. Still not there. Oh, dick punch. Am I right? Ooh, good one. You bought it at 14 cents. That's nice. Man, I bought it before all of you guys. I knew it before. No, you know why I bought it? I just bought it because this was a straight what would dummies do purchase. I looked at all these idiots that were pumping it, that were shilling it, and I was like, well, they're shilling that one. The other one they were shilling was Pyth. P-Y-T-H. Pyth. Yeah. Anyway, there we go. SEI at 27 cents. Yeah, that's not bad. It's not anywhere near 36.9 cents, though, is it? I'm still 10 cents away from being at zero. Mother effer. Well, I didn't get a lot of it. Because that was my belief. My belief was very minimal. So I'm willing to accept it. You got to take your lumps. Okay. In taking those lumps, let's move on to the next story. U.S. Housing Agency. Let me see if I can get that picture. Oh, snap. That's a cute little house. Oh. It's a cute little thing. Here, let me move the banner because that's just such a cute little house. Look at that cute little house. Look at those big, look how big Bitcoin and Ethereum are though. Wow. U.S. Housing Agency FHFA, right? Considers digital assets like Bitcoin for mortgage collateral. What? FHFA's exploration of crypto in mortgage processes reflects a wider regulatory shift towards embracing digital financial assets. The Federal Housing Finance Agency, FHFA, is exploring whether digital assets and various holdings like Bitcoin and to an extent Ethereum should be considered a mortgage in the mortgage application processes. Well, one would say, yes, it's money, but they never have before. I'm not going to say the amount, but a lot. I had a lot of Bitcoin and Ethereum and enough to buy the house 3 times. And they didn't count $1 of it. They had to go do some weird income calculations in my bank account and they counted none of it. I'm like, but I could just buy it in cash. They're like, yeah, it doesn't count. I'm like, how does it not count? That's what it's worth right there. That's a publicly traded company, bro. Anyway, yeah, nope. So anyway, FHFA Director Bill Pulte announced the initiative on July 24th. July 24th. I think the math is wrong. I think they meant June because they didn't announce this in the future. The guy who wrote this, English, not very good. He's got a lot of consonants and stuff up again, back to back. And so, the grammar's not going to be great. Anyway, today announced via X, noting the agency's beginning of a review process to determine how crypto might be used in home loan evaluations. Go on. We will study the usage of cryptocurrency holdings as it relates to qualifying for mortgages. Yeah, well, they have to, right? Because JP Morgan Chase just said they're going to allow people to have Bitcoin not only custodied at JP Morgan Chase, but also it could be looked at as collateral. So now everybody else has to get on board, don't they? So the FHFA regulates America's housing financial system. It oversees Fannie Mae, it oversees Freddie Mac, and the federal home loan banks, the FHLB. Traditionally, mortgage underwriters accepted collateral that included the applicant's savings, your retirement accounts, any publicly traded securities. Cryptocurrency, however, has been excluded due to market volatility and lack of regulatory clarity. Okay, so wait. Publicly traded securities, because we know every publicly traded security is completely legit, right? Like Nikola and GameStop and Hertz. And yeah, these are all completely legit. AMC, super legit. You should definitely be able to get collateral against that. Anyway, this change could substantially alter the underwriter's reluctance as the emerging industry could be recognized as a viable financial instrument for housing finance. Well, we all know that we won't need to get housing finance, will we? We will just go borrow with ourselves against our crypto, and the banks can go fuck themselves. They have decided crypto doesn't count, and crypto has decided we don't care. We will make our own loans to ourselves. Good day to you, sir. So I think this is probably too little too late, but we'll see. Some people would probably prefer to maybe to lock up some Bitcoin as part of a loan, but I just say spin up the loan yourself, but we'll see. The planned review comes amid a broader wave of regulatory openness towards cryptocurrency in the U.S., especially under President Donald Trump's administration. While the FHFA has yet to reveal how the crypto mortgage process would be evaluated, Strategy, Michael Saylor, we're going to talk about him in a second. He developed a Bitcoin credit framework that assesses risk using BTC's price volatility, the loan term, and the projected returns. The projected returns. That's The demon, my friends, is among the details. The model is designed to help institutions evaluate borrower strength when digital assets are involved. Industry players have welcomed the move. Whoa, that's very welcoming. And pointed out that many digital asset holders face hurdles when applying for mortgages. Yeah, no shit. Tristan Yiver, the co-founder of Backpack Crypto Exchange, you definitely want to keep some money there, noted that crypto holders often needed to convert their holdings into fiat and allow the funds to sit in a traditional bank account. Yes, there's a term for that. Is it seasoning? What do you real estate guys? Isn't it called seasoning when you take cash, like let's say you take some crypto cash, you put it in the bank for a certain amount of time, 60 days, 90 days, so that it qualifies and you can do some weird backwards extrapolation for income? I think that's what it is. I'm cautiously optimistic that I'm correct about that. Anyway, according to this guy, the process delays financing and has forced many long-term holders to exit their cryptos prematurely. Anthony Apoyo, who leads the Wyoming State Token Commission, Stablecoin Token Commission, that's a lot, reflected on these practices from major financial institutions. He shared that JP Morgan, for example, requires digital assets to be converted and seasoned. It is seasoned in a bank account for several months before being considered for mortgage valuations. Yeah. I did that. I seasoned them. And then on the first house I was looking at, when it just something wasn't right, and I just decided I unseasoned them. I took what was going to be my down payment and I bought Bitcoin with it. And I subsequently got a double out of it by the time I then put it back in the bank to season it. And I ended up getting a house that was 50% higher price tag and an extra 5,000 square feet. An extra. Why? Because I took the original down payment, put into Bitcoin at 38,000. When Brandon and myself and his wife went to the Getty Museum on the train, on the shuttle to the Getty, I bought them. I bought my Bitcoins. Those Bitcoins were for my down payment that was going to be for this other house that I then took. After the election, I flipped that back into the Bitcoin. I took that, and that was, after the election, I took that portion that I had flipped into Bitcoin. I went back to cash, put it back in Chase, re-seasoned that, and that was the down payment for the subsequent purchase. Whew. Man, the things that we do, am I right? No, the house, not the lot. God, the lot's like a lot. No, the other house I was looking at was 7,700 square feet. And this one is bigger. So yeah. It's just more space for the cats. It's more, yeah. They're just wrecking stuff today. Today's been a rough one. Today's been an expensive day. I have to have some good days in the market to cover the damage that we've done today, but that's all right. It's all right. Ashley Furniture, here I come, baby. Okay. And then finally, I want to talk about Mr. Sailor. Oh, gentleman Sailor. Let me see. Wait, no, cancel. Let me see if I can get a nice little picture of this douchebag. Making up terms, trying to convince people that stuff that doesn't exist does exist. Let's talk Turkey. And by Turkey, I mean Michael Saylor. Strategy stock volatility sinks to historically low levels, possibly making the shares less attractive. Why? Well, the Ponzi scheme that is Strategy, run by Emperor Michael Saylor, he has always pointed out that high volatility is the reason for owning MicroStrategy, right? That's what he told everyone. This is why you own it, because of its volatility. We're volatility farming. That's his whole thing. He says in his whole scratchy ass, creepy ass, don't check his internet search history voice. And he's always said, listen, high volatility is the reason that you would own MicroStrategy. So then you say, okay, well, then if the volatility is low, why would I own it? Again, why would I have you buy and hold Bitcoin for me with stock that if your company goes belly up is useless. Like, I have equity, and it's some liquidation event or some unwanted, unwarranted, unsightly, disorderly unwind in the asset, a bankruptcy or whatever, I don't get anything as a shareholder. I don't get a fucking penny. I get zero. I get a dividend if you give it to me, but if you go bankrupt, I get nothing. Senior debt holders get some Bitcoin probably, or they get some Bitcoin after it's been sold. They get some cash. I don't get a fucking dime as a shareholder. And so if the only reason to hold it was volatility farming, and I no longer have that, well, why would I hold your piece of shit asset? Anyway, that's just internal monologue. You probably didn't hear any of that. Strategy's 10-day realized volatility is at its lowest level since they began acquiring Bitcoin in 2020, while implied volatility has dropped to 48.33%, which is a near all-time low. The firm added only 245 Bitcoin last week, its smallest purchase since March, as the market focus begins to shift towards fast-growing group of new public Bitcoin holding companies. I mean, he made it where everybody wants to copy and copy and copy and copy. So here we are. Strategy is currently experiencing its lowest 10-day realized volatility since it first added Bitcoin in 2020. Yeesh. Realized volatility refers to the actual historic movement of an asset's price over a specific period of time. So in this case, a 10-day period. Like if you look at the volatility of Ethereum over a 10-day period, it's a lot. It's pretty intense. Almost 2,900, almost 2,100. 10 days. Anyway, realized volatility is calculated using past price data, and it indicates how much the price has fluctuated in reality as opposed to how much it is expected to fluctuate in the future, which is, again, just kind of like a forward-looking assumptive process. So in addition to subdued historic price swings, strategy, MSTR's implied volatility currently sits at 48.33%, which is among the lowest levels recorded for the stock in recent years. Implied volatility, so now we're on implied volatility. This reflects the market's forecast of a stock or an asset's future volatility, and it's derived mostly from the options prices, right? So a lower implied volatility suggests that the options market is anticipating smaller price movements going forward. Lower volatility, lower options premiums. You see? So for comparison, MicroStrategy's implied volatility peaked at 225% in November of last year after the election. 225%. Now we're at 48%. So, and that was, when there was the sharp rally in Bitcoin at that time. It went from the 70K range up to and beyond 110. Yep, in December, remember? So anyway, pretty cool. At that time, Bitcoin traded above 95,000. MicroStrategy's share price surged from 350 to a high of 525. As of now, MicroStrategy shares are trading at 367. What should they be? About $4. Because you own nothing. MicroStrategy owns, Strategy owns Bitcoin. You as a shareholder, you own nothing. Nothing. Why is this so hard for people to fucking wrap their minds around? You own nothing. Oh, you get a piece of the volatility. What the fuck does that even mean, Michael? Anyway, Strategy currently holds 592,345 Bitcoin, but last week they added 245 Bitcoin, which is kind of a paltry sum, but it was the smallest weekly purchase they've had since March, and the slowdown in accumulation may suggest a saturation point, particularly as other public companies globally begin to adopt their own Bitcoin treasury strategies, and what Michael's doing is not all that interesting anymore. And so you might say, oh wow, look at the price movement here. Well, shit, let's go to these newer companies and let's catch those booms. So it might turn out that Strategy might end up being Dogecoin, and people are just going and looking for other meme coins. They're looking for Pepe's and burnt toast and all the other old stupid ass meme Bitcoin treasury companies. And remember, a Bitcoin treasury company is an abject admission to everyone in the world that we all in my company, we failed. We don't know how to run a company. We are a huge fucking failure, borderline bankrupt failure. We are so bad at our jobs, at our company, whatever we propose to do, that we took money for, by the way, public money. We took your money and we shit the bed. We're so bad at what we do that we're willing to throw all of that away and buy Bitcoin. What? Yes, that's what we do. But what about, don't you guys ship flowers anymore, or make packages, or make wine? No. Mm-mm. What about the online gambling casino and the furniture store? No. Bitcoin. Oh, so wait, what? So we're going to give you more money and we're going to pump your share prices so that you guys can buy Bitcoin that we as the shareholders, we don't have a call against if you guys should go bankrupt, because you're so good with business the first time. I just got to wonder if you're going to fuck this up too. So why would they not? Anyway, it's just like, don't loan money to somebody that's lost money, or like somebody that's constantly in money problems. If they're always in money problems, don't give them any money. It's not going to solve anything. Like, oh, I'm a meth addict, bro. I just need a little bit more meth. And then what? More meth. You just need more meth to what? To get down the road to get more meth? Yes. Fuck you. I'll get your ass in a clinic. That's what this is. It's so stupid. It's mind-boggling. Anyway, we'll see. Capital flows appear to be rotating from MicroStrategy, from MSTR strategy, to smaller Bitcoin holding companies, many of which are experiencing strong performance in both their share price, their trading volume. You know, again, these failed companies that then just decide to throw everything away and buy Bitcoin. Great. Let's definitely go invest in them. There's a lot of money to be made there. Among them are Canada's LQWD Technologies Corp, which rose about threefold in recent days on its BTC treasury strategy. They don't even have the Bitcoin yet. Liquid. Listen, man, a technology company, what's your technology? We buy Bitcoin. God damn, man, what a fail. Then fire everybody at your company. Everybody. There should be you and one nerd accountant. That's it. Everybody should be fucking fired. Empty office. And you should sell the office. You should sell the office space, sell the parking placards, all of it. Because if all you're doing is buying Bitcoin, you don't need all the employees. Are you going to fire anybody? No one's getting fired. These people are all having parties. They're partying 5 days a week because people are so stupid. They're buying their fucking stock. Bunch of morons. Anyway, notably, this marks the fourth consecutive week in which MSTR strategy has not utilized its at-the-market equity offering program. As a result, the company now trades at a 1.83 multiple to its net asset value in Bitcoin terms. This is how bad you know they've squandered. They've been buying Bitcoin and making money the whole time, and they're only at a 1.83 multiple to their NAV. This company sucks, dude. MicroStrategy sucks. Be warned. Be fucking warned. This is a house of cards. Anyway, this multiple is calculated by dividing the company's enterprise value by the market value of its Bitcoin holdings. So that's where we are. Strategy, because they can't raise money this way, is starting to lean in these kind of weird alternative financing strategies. These at the market offerings tied to its perpetual preferred stock tickers, which is STRK and STRF. And then they have fixed income products, which represent kind of a pivot, but no one knows whether they're going to gain traction or whether people just keep looking at it like the scam that it is. Yeah. So there we go. That's all I got, man. That's all the news. We did it. We got through it. We got and gentleman Mike brought us home. So yeah. Well, I mean, it's math, so I don't know. Remember, there's a lot. You can go into the argument of like what's livable and what's not. Like basement square footage, they say it's not livable, but then the insurance company counts it as livable for the sake of insurance. So if I'm paying for it, if I'm paying insurance for it based on square footage, buddy, that's the square footage. So no, it's not off. Let's see. Interesting day. We'll see if some of these prices hold and where they hold. Let's go to the thing just to wrap it up. Bitcoin clearly 105. Ethereum having a good day. It's up, 8.5%. Why is XRP up? Yeah, no one knows. Dummy's gonna dummy. Why is Hyperliquid up? Well, because Brandon bought it, obviously. Sui's up. It was up a little higher. Aptos having a good day. Look at that, 17%. Why? No one knows. Ondo's up, cool. But listen, they had a bad weekend. A lot of these things got punished. So this is a little bit of get back. This is pretty healthy. That's dramatic, but again, it ain't where it was. Listen, somebody bought it at $1.14. They are not yet. They have not yet had their thirst quenched. Just yet. Nice to see Jupiter having an up day. We haven't had many of those lately. Everything else is kind of where it is. Oh, look, gamer tag. The gamer tag token is up from nothing to a little bit more than nothing. Rejoice. Anyway, we'll call it a day. Stay in school. Don't do drugs. Don't do anything. My poor insolvent drunk, struggling on meth grandmother, or this delicious mocha. It's not that delicious. Shit, I may not finish it. I got to go do the second part of my leg workout. I don't think I'm going to finish that one. The kitty won today, you guys. Sometimes I win. Sometimes Brandon wins. Sometimes the markets win. And today, the kitty won. So, 1-0, kitty. 1-0.
Killing time, no place to go. Everybody's feeling low. All alone in the streetlight glow. You fall into your head. It's all that you want. It's all that you need. Take some time to make believe. It's all that you want. It's all that you need. Just some time to make believe. It's all that you want. Killing time, no place to go. Everybody's feeling